Alright, so I'm going to give you guys the Philadelphia real estate market update. Right now it's currently December 2021 and we are headed into the year of 2022. Crazy, right? And right now people are still curious as to whether the market will actually crash, whether the interest rates are going to rise or they're going to fall. Will people be scrambling to the grocery stores trying to buy up all the toilet paper again? I'm going to go over all of that today. Hey everybody, my name is Lillian Chuckweezy, and if this is your first time to my channel, thank you for tuning in. I talk all about buying and living in Philadelphia, and I give you a bunch of tips and advice to help you along your home buying journey. And if you haven't done so yet, go ahead and hit the like button and hit the subscribe button so you can learn all about buying a home right here in Philadelphia. So first things first, the market is still extremely hot. I mean, there's a huge gap between the supply and the demand. So right now, sellers are still able to get their houses pretty much bid over asking price and closing on over asking price, which is why a lot of sellers want to actually enter the market so they can sell their house for over market value. So the median sales price for a single family home in the Philadelphia metro area back in October 2021 was $304,000, which is actually a 3% increase since October 2020 of last year. And just to give you guys an example of how much these houses are actually getting overbid, let's say a house is on the market listed for $300,000 in Philly. Buyers will actually bid that house up to maybe $310,000, $315,000, maybe even $317,000 to close on that house, which is a big jump from $300,000. And not only are houses getting overbid, they're actually closing really fast. I mean, houses are on the market for 3 or 4 or 5 days. Houses are going under contract in 5 days or less. I mean, I'm going on the MLS and I'm checking, I'm going to see these properties with my buyers, and by the 3rd day that a property is listed, I'm already noticing that agents are requesting last offers within 3 to 4 days. It is crazy. For example, when I'm going to these properties with my buyers, by the time that I actually leave, I'm checking the listing again, seeing if anything updated, and noticing that they just updated the listing requesting last offers, which is crazy. Sometimes we go to these properties and by the time we leave, I'm notified that the house has already gone under contract, which can be very frustrating for me and for the buyer, most importantly. And I've had to tell my buyers to try to stay as confident and positive as possible, because it does get a little draining, frustrating, and just overall tiring to go from property to property knowing that by the time we step back into our car that we need to make an offer. But this is also a good thing for buyers to understand, that when you are actually going into the market, that you need to be very serious about the houses that you do actually visit, because the last thing you want to do is go from house to house to house and you're not ready to make an offer and they're already gone by the time that you are ready to make an offer. One strategy that I've been using as an agent is to basically call ahead of time to make sure these houses are actually still available, because sometimes if you do call, the agent may notify you that they are looking to accept an offer within the next hour or so. So it's important, if you are out there with your agent, to make sure that they are aware that the property is still available, because even though it says that it is still for sale, it may be going under contract sooner than you think. So right now we all know that we have super low interest rates with a tight supply and a high demand, which is really leading to rapid market appreciation. In September of 2021, the median days on market was actually 12 days. And in October of 2021, the median days on market was 11 days. So you can see the inventory is going extremely fast. I'm not just talking, these are actual stats. So I'm letting you guys know how fast these houses are really going. So that basically means that half of the homes that are on the market here in the Philadelphia metro area are selling within 11 days or less. And something interesting that I've noticed as a buyer's agent is that a lot of people are actually still looking for space in Philadelphia by wanting detached houses. Now in Philadelphia, we know most of the houses are row homes, which means that they're right next to each other, literally attached one next to the other. So a lot of people are still looking to stay in Philly, but are looking for more so detached homes so they can create a little bit more space between themselves and their neighbors. So detached homes actually saw a 6.8% decline in comparison to the month prior. But it is important to note, it is kind of hard to find detached houses in Philly, and obviously you're gonna end up paying for that extra space. This market is so hot that it has really discouraged a lot of buyers from being able to purchase a house. I can't even imagine the people who are trying to buy houses without an agent, because even as an agent, it's been very difficult for me to help my buyers get houses. Even though we have been getting it done, it has been very challenging. But don't let that fool you. There's plenty of buyers who are constantly entering the market looking to buy, and those buyers who initially got discouraged after time are re-entering the market as well. I know with the family that I'm working with in particular, we had gotten declined probably 6 to 7 offers before they really started getting discouraged, and I had to continue to just lift them up, give them the motivation, and let them know that we are going to find them something. And thankfully, we actually did end up finding something that we'll be closing on next week. So I'm really excited for them. And now they're even more encouraged to go out there and buy another house, which will actually be an investment property for them. So if you're out there right now looking for a house to buy, do not give up. It is a tough market full of sharks, but you can get yourself a house with the right agent. Now let's talk about what may possibly happen in the future due to COVID and foreclosures and everything like that. Now, even prior to COVID, Philadelphia was still a high foreclosure city, making it a pretty hot distressed sellers market. Now in 2019, Philadelphia actually had one of the highest foreclosure rates in America at 0.75%. This means Philly had approximately 5,000 properties in foreclosure. In 2010, there was actually 12,700 properties that entered foreclosures. So even before COVID, like I said, it was a really hot distressed sellers market. And in January of 2020, nearly 1 out of every 1,000 houses in Philly entered foreclosure. Now, the Pennsylvania Housing Finance Agency has been working closely with homeowners to try to help them with their mortgages through their program called the Residential Housing Foreclosure Diversion. Now, this program has been extremely helpful. It was actually created in 2008 due to the market crisis back then, and it has helped over 14,000 homeowners actually save their house. Now, if you guys don't know the 2008 crisis, some of you may be that young, maybe not, but regardless, I'm gonna explain it really quick. Basically, back then in 2008, there was this whole crisis that happened based on the subprime mortgages that were given to people who basically could not afford to keep their mortgages up. So a lot of people took out these crazy loans and bought these houses and were not able to keep up with their monthly mortgage payments. Therefore, thousands and hundreds of thousands of houses went into foreclosure and tons of people lost their homes. However, what happened in 2008 will be very different from what may or may not happen in the coming year or so, because there were many programs just like the Philadelphia housing program that were put in place to help homeowners actually pay for their mortgages so they won't lose their homes, unlike the 2008 crisis. And basically, these programs help homeowners by working directly with their lenders and helping them lower their monthly mortgage payments, and also by providing a moratorium on foreclosures to Philadelphia homeowners that actually qualify for that. And as I said, this is why I don't think the same type of crash will happen as what happened in 2008, because there's so many programs to actually assist homeowners. And this is why I don't think the same thing that happened in 2008 will happen now, because of all these programs that are available, not just in Philly, but in all parts of America, in all states. For the most part, they have individual programs to help homeowners in those areas. Also keep in mind that the American Rescue Plan Act, which is the federal coronavirus relief package program, allocated $350 million to Pennsylvania residents to help them with mortgage payments and other housing related expenses. This package was basically intended to help homeowners avoid mortgage defaults, utility shutoffs, foreclosures, and much more. So ultimately, I do believe that a correction will come, but I do not think it'll be a crash, and I don't think it'll be anything like 2008. I do believe for the upcoming year of 2022 that the market will actually stay extremely hot. If there is a correction that happens, it will take some time for that to happen, so I don't think anything drastic is gonna happen in 2022, but we'll see what the future looks like. So if you're a homeowner right now and you've been thinking about pulling the trigger on buying a house in Philadelphia, then now is the time to take advantage. I'm telling you guys, with all these low interest rates and the ability to get in on appreciation, you don't wanna miss your opportunity. In terms of appreciation, Philly is a great market to invest in because the annual real estate appreciation in Philly is about 5%, which actually puts Philly in the top 30% nationwide when it comes to appreciation. I do believe more people will continue to leave New York and come to Philly to basically get more bang for their buck. People in Philly are also staying in Philly and just looking for detached homes and just a little bit more space. And people even from Jersey are coming to Philadelphia because they want to save on all the taxes that Jersey charges. And Philly has super affordable tax rates on their houses. So with that being said, if you are looking to buy or invest in Philadelphia, now is the time. Please go ahead and reach out to me. My team and I would love to assist you in your home buying journey. You can actually give me a call, you can send me a text, you can send me an email, whatever you want to do, or you can even book a consultation call down below. And I would love to discuss what your criteria is, what exactly you're looking for, and basically how to go about that process. So go ahead and reach out to me, guys. If this video was helpful, please go ahead and give it a like. Subscribe to the channel if you want to learn more about buying or investing here in Philadelphia. I'll see you guys on the next video.